There he is, Andrew Carr. Hello. Sorry for the brief delay, everyone, and thank you for joining us. We will get started right now. Um, so, um, um, Fletcher, you beat me to it. Will this be recorded? Yes, this will be recorded. We will send this out to everyone who is registered. We'll probably post it on our Twitter afterwards as well too on a YouTube link. Um, so if you want to ask a question, your name may or may not show up in the Zoom. So join anonymously if you have some questions. Um, we have 35 slides for you today on the best thinking Andrew Carr and myself have been able to do over the last 2 weeks on principles for your internship. I wouldn't say we're the world's foremost experts on intern programs. As an analyst and PM, I have, partially managed two, fully managed two others. So I have some experience on the buy side with summer intern programs. Andrew has some experience actually doing some training for an intern class for one of his firms. And were you an intern, Andrew? What's your experience with summer internships?
I was. I actually was a summer MBA intern at Balyasny, where I eventually joined full time after graduating from Columbia.
So we have some degree of credibility um, on this topic. As always, I think we don't know everything, so there's points where we may be off base and happy to have debates and discussions. But really, our goal is to, as with all things, is to give some framework, some thoughts, some advice, if we may, that we would give ourselves if we were in the spot of joining a buy-side fundamental equity research firm for the summer. As my oldest son gets a little bit older, he'll be 12 this year. I also use the mindset a little bit of the paternalistic things I would tell Ben if he was starting a summer internship at a hedge fund or long only. So some of this might be a little old man shouting at clouds. These youngins don't work that hard anymore, so forgive me that. But hopefully we can um, we can you can abstract something helpful out of this time. So without further ado, I will go ahead and share my screen. So we're here to talk about um, your summer internship. I wanted to start with just a high level on why asset managers conduct summer intern programs. It seems kind of nonsensical in a way with everything going on in markets and how busy this job can be to bring an analyst in for 10 weeks and send them off on their merry way. I think generally you'll hear the conversation that interns are a cost center, and I think to some degree that's true. Um, as I've kind of thought through intern programs over the years, I found them to be a pretty helpful tool on the buy side's kind of eternal hunt for talent. And um, there's a paradox on the buy side of hedge funds and long only asset managers that there's no shortage of people who want to do these jobs. Point 72 is quoted in the Hedge Fund Journal, received 16,000 applications in 2018 for 49 seats. And so there's many young investors that want to go work at an institutional asset management firm. The reality is this is a hard job. Not everyone can do it. It requires a top tier multidisciplinary toolkit of financial statement analysis, modeling, valuation, thesis development, and it requires really in this day and age those tools before you get the job, right? In earlier eras, a smart person can show up at a hedge fund, convince the hedge fund you're an intelligent person, and they would treat you as an attractive athlete, intellectual athlete, and teach you all the basics. That's less of the case these days. This job also requires a high degree of mental and emotional endurance, which is really hard to test in an interview process. And so the more I thought about intern programs, there's a lot of things you can convey in an interview process that you really can't tell many things about an analyst candidate until you get with them, work with them for 8, 10, 12 weeks. And so you can test technical skills, but it's hard to know the other skills of an analyst until you really work with them in a period of time. There's a really high cost to a bad hire, I think, in all industries, but particularly in the asset management industry, where really your only IP is the intellectual IP of your investment teams. The investment teams pods tend to be tight clustered teams of 3 to 10. Even at these large pods with thousands of teams, they're clustered down to small, tight knit, elite teams of analysts. And an underperforming, a disruptive analyst can be a real problem on those teams. And so having a free look at someone over 10 weeks and really, in a way, de-risk that full term hire. The paradox of small selection rates, um, but hard to find really high performing analysts manifests in the reality that top decile junior talent has lots of options. In the old stream to the hedge fund world, you go to an investment banking class, pick off one or two of the top analysts, and there you go. The reality is private equity's had an insatiable appetite for bankers. Often they're interviewing hedge fund analysts, sometimes even before they hit the desk, which is just absolutely bizarre. And if you communicate well, interview well, and have a top decile technical toolkit, you have a lot of options on Wall Street these days. To some degree, there's a lemons problem as well with experienced hires, that your top decile experienced investment professionals tend to stay put or require large guarantees to move as they become more senior. And so there's an appetite in the buy side, kind of an increasing appetite to hire direct from undergrad, hire that blank sheet, that blank page, that young, moldable, candidly cheaper analysts. And starting with that intern is kind of the ingestion point of those careers. I think also the filtering challenges have become harder. The old reliable sources of Ivy Leagues and investment banking groups haven't been as reliable as streams of analyst talent onto the buy side. Right. And so this is kind of the setup, the evolution, some of the backdrop of the search for junior talent on the buy side that contextualizes asset management internship programs. And so, the way I think about intern programs, it's really a way to evaluate primarily a full-term hire, to build your future pipeline. Sure, did Andrew Carr in his summer internship generate some fresh perspectives or some insights on a special project during the summer, and a helpful earnings preview? I'm sure he did. However, most of that work is not true kind of durable alpha driving work for the most part. Interns at certain times have generated some real insights for me as a PM, but they've mostly been a time suck, a cost center, with just incremental research insight. Really, the underlying impetus for an internship program is 8 to 10 weeks to de-risk the full-time hiring decision, to give me time to really evaluate the technical skills. Can I drop this person onto my team? Can they model? Can they value companies? Can they rip apart a business? Can they generate a thesis? Those technical skills that, yes, we can evaluate in an interview process, but on in a thinner dimension. But critically, over that 10-week period, I can evaluate the intangibles of an analyst: the passion, the tenacity, the curiosity, the work ethic, the relationship building skills they have, the likability, the attention to detail. So many things you can hide in a 10-week interview in a 2-day interview process, you can't hide in a 10-week internship. And so, one of the ideas I'd like to convey to you is that thinking about your internship process as a 10-week interview cycle is more accurate than not. I kind of was thinking through this kind of mental pattern of a baseball tryout. We want to see if you can hit, throw, and run well enough to join the baseball team. And so we're going to see you over the 10-week period. Can you hit, throw, and run? I think there is, to some degree, I've always found internship programs to be reinforcing in a positive way of firm culture and values. The best hedge funds have some sort of cult-like ethos of, we're going to train you from scratch and have you do it our way. And so the fun of the summer intern season of doing mixers and social events and happy hours and the opportunity to really start with a blank page and install our deep research process into you is, I think, reinforcing of firm culture and values. And so that's kind of high level where institutions are coming from. This is also a two-way street, right? You are making a critical first decision in your career. And so this isn't necessarily for consumption to your firm, but some internal thoughts for you, if I may, that whether you're an undergrad or an MBA, you're in school now as part of a self-discovery process, right? You're working to understand what is your interest level, right? Do you actually find the hunt for alpha fun? You know, some of my analysts and PM friends who are 15 years later still practicing the craft will often say things like, "This job is like a video game. It's so fun. I couldn't imagine doing anything else." Now that's not true every day. Usually, when you're getting tariff tape bobs, they're complaining and fantasizing about retirement. But is this something you're interested in? Do you have a natural aptitude for this career? Could you see yourself doing, being any good at this? Could you be a top decile investor? And alignment, does the lifestyle and risk reward match profile match my values? The firms that Andrew and I have been at would be about as far from lifestyle places as you could imagine. It's kind of fully dedicated, all in career path, certainly in your first 5 to 7 years. There are ways as you build a family and get more experience to carve out a lifestyle. But expecting to walk into a hedge fund and have a balanced lifestyle in your first 5 years is not necessarily a recipe for success. So what are your alignment? What type of investing do you like? An internship program gives you an opportunity to experience what working at a multi-manager or long only feels like for the summer. Do you like that fast feedback, tight deadlines, intense environment of a hedge fund, of a multi, or do you like the more academic, deep and patient study environment? And so I would encourage you to kind of think and perhaps even journal through your summer of, what's the biggest thing you've learned? How did your stress response patterns work, right? Everyone has a plan until they get punched in the face. Everyone wants to work at a hedge fund until they go through earnings season. Their ideas go the wrong way. Did the stress energize or drain you? Trying to get clues of, is this something you could see yourself doing? Where do you add real value and where do you struggle? And so I encourage you through your internship process to go on this journey of self-discovery and understand while you're still in university or undergrad or MBA, is this a career path you want? I really like this Thomas Merton quote. People may spend their whole lives climbing the ladder of success only to find once they reach the top that the ladder's leaning against the wrong wall. So an internship program for you is really your opportunity to understand, is your ladder leaning against the right wall? And do what you love is not just some empty trope, but doing what you love is really gasoline to fuel the endurance necessary for success in this job. This job is not always easy. In fact, most of the time, it's not easy. It requires incredible endurance and really a true passion for either analyzing businesses or trading the tape or whatever element, whether you go to a long only firm or a single manager or a multi-manager, really, kind of seeking and testing your alignment to understand, is this a career for you in a low risk, low stakes way? Because when you take that first job out of college, if you figure that out 6 months in and need to pull the trigger, then the cost of breakage is a lot higher at that point. All right, so that's high level framing. Working backward, like one of the questions we got from an intern we were discussing is, how do I make the most of the 10 weeks I have? And ultimately what interns really want to know is, how do I get the return offer, right? In the sense that this 10-week internship process is really an extended interview process. What we're trying to deconstruct in a way is, how do I receive that offer? Not necessarily that I want to go back to the firm, although I would guess that most of you, if you've selected to intern at a firm, there's a high likelihood you return on a full offer. But having that optionality, right? The number one question if you do interview somewhere else is, did you get a return offer? It's kind of a check on your summer that other potential firms would have as well. So a few dimensions of working backwards. I'd say a high level point is that consciously or subconsciously, we're evaluating you in a game of pattern matching to our own high performing full-time analysts, right? If I'm running a team of 6 people, I want to see, does the intern align with the other junior investors on the team? Can that intern, conduct the same degree and quality research, communicate in the same way? Um, It's less about the idea performance. I think unless you're at a really high velocity firm, which I think would even be rare, what's really not going to matter is how the ideas you work on perform. And the reality, it's going to take you a few weeks to generate a thesis anyway, so you might only have a 3 to 5 week performance evaluation period for your stock picks if you work on a thesis. So I wouldn't worry about how your ideas perform. I would worry more, concern yourself more with your demonstrated ability to deliver institutional grade thesis work that strikes the appropriate balance between rigor and timeliness. And so we'll talk a little bit more about that. It's also about, feedback receptivity and learning velocity. You want to demonstrate both strong current skills, but an appetite and ability to receive feedback and learn and improve at a high velocity. And then cultural alignment. Do you fit in with the team? Um, can you demonstrate the work ethic required, the communication skills, the curiosity to just demonstrate a pattern match of the existing investment team culture? So some degree of mimicry or understanding how a team is operating from a current product and research perspective can be helpful in your intern process. And so just kind of, thinking again, working backward, what do you want to hear at the end of summer? You want to hear, hey, you worked hard. You busted your butt this summer. You added value to the team. We enjoyed working with you. You delivered consistent, high quality work. You demonstrated an aptitude for this job. And if you can check those 5 boxes, the probability of this last box hitting of, hey, we'd be idiots not to offer you a full-time seat, are some of the high degree of dimensions to consider for your summer. I'm a little surprised, I even have to say this, but this is a very common conversation I have with, older PMs or older millennial PMs who are looking for talent. There's something about this generation that has certainly more entitlement than Andrew and I had coming onto the buy side. Often there's a little bit of arrogance associated with that. Hey, I know what I'm doing. Spoiler alert, you have no clue what 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 you're doing. You are a blank page, and that's the reason we brought you in as an intern, to be a blank page, to be a sponge, to learn our process. And really the what's in it for me mentality of certain streams of talent in this day and age. I won't get into the whole Shadur Sanders saga, but there's a reason he slipped to the fifth round, and it wasn't his talent on the football field. So if you have a gold diamond encrusted watch, tip, don't wear it to your summer internship. I do think there is some degree, and I hear this from a number of firms, that the Ivy Leagues are losing buy side seat share. I went to the Harvard of the Southwest, Arizona State University. In my day, breaking into the buy side was really hard. Fast forward 15 years, the Ivies have lost seat share a bit, and there's been more opportunities for state schools and other, non-Ivy universities to break in. And I think a big part of that is the chip on your shoulder, lack of entitlement and arrogance of other universities. So even if you're coming from a Harvard or Wharton or Stanford, understand, check your entitlement, your arrogance at the door. It's not about what's in it for me. It's about how can I be most helpful for the firm. If you take nothing away from from this presentation, understand the mindset and mentality as you walk in the door of hunger, willingness to go the extra mile, thoroughly vetted, error-free work, high say-to-do ratio, and humility of, if you don't know, the answer is I don't know. Your ability to take feedback, make changes in process. And really, there are many things you can't control. You can't control really how intelligent you are, your natural aptitude, your natural emotional wiring for this job, but you can control when you show up to the office, right? We recommend a FILO. We've got accounting nerds, so we got FIFO and LIFO. And what about FILO? First in, last out. You can control when people show up every day, and you can control being there 5 minutes before the other first person joins the desk and being the last person out, demonstrating that work ethic. Newsflash, it matters. I mean, it certainly doesn't matter as much when you become a senior analyst and PM. You kind of work the hours that you need to, want to value. But as a cost center, a junior analyst, and intern, the hours and the commitment you put into the job really matter. You can handle the controllers by double checking your work, catching sloppy errors. I don't know the exact calculus of the number of sloppy air strikes you get in a summer, but it's not 12, right? If you're making 12 sloppy airs, there's a point where it starts to be stops being an acceptable mistake and becomes a pattern of sloppy work that can be fatal to your internship process.
And just to chime in, if you are last in, first out, you're not going to get as many at bats for sloppy errors.
Yeah, exactly. So double check your work. Bring a proper attitude, dude. You are lucky to be at this firm. You've joined an institutional asset management firm for the summer. The mentality is I'm grateful to be here. It's a credible learning opportunity. Wherever you're at, you're paying a lot of money to your university for education. You're going to learn more in this 10 weeks than you will probably an entire year at your expensive university. So treat this as an incredible learning opportunity. And hey, I want to be a team player. How can I be most helpful to my team in my 10 weeks here? That mentality is going to go much further than an entitled, arrogant mentality for the summer. So a few red flags, a few things to keep in mind. The work ethic and presence. Avoid the tardiness, the excessive out of office, the lifestyle hours. This is not a time to have a nice summer in New York. This is the time to execute well in your 10-week internship process. Consideration of analytical rigor. You don't get those repeated modeling or math errors. It signals a careless work and shallow understanding of the craft. Deploy intellectual curiosity. You could complete your assigned task, but if you don't dig deeper into what else can I do or what does this mean or go down the rabbit holes and connect the dots, great analysts turn over extra stones. The box checkers don't generate alpha. This critical balance between speed and accuracy. Talking to many PMs who bring in junior analysts, there's a combination of more often than not, it's this analyst is spinning their wheels or going way down a rabbit hole. They took an exercise that should have taken 2 days and they spent 2 weeks doing it, or you turn in rush work full of mistakes, right? Both are problematic, believe it or not. The institutional equity research demands both. It demands a rigorous analytical analysis, but it also demands timely analysis. So we'll talk a little bit more about finding that balance. It requires a feedback loop. If you keep making the same mistakes, that's a problem. Right? Mistakes will happen. You're going to have errors in your model. You're going to have errors in your analysis. But learning velocity is a key evaluation dimension. Right? Can you make an error and learn from it and come back and not make that mistake again? Proactivity and ownership. The red flag analyst waits to be told the next step. They seldom volunteer ideas or next actions, but PMs expect interns to advance the ball, all analysts to advance the ball, not just follow directions. Communication is a key one. The rambling book report communication where you're talking, basically regurgitating a sell side initiation, saying a lot about a little, or the slow talkers. The slow talkers always drove me crazy. Or the excessive ums or likes. If you say like between every four word, email me. I have a communication training program for you that we don't run, but it's just a few $100 and will really help clean up some of that communication. So clear, concise communication is critical. And lastly, conviction calibration. The overconfident opinions backed by thin evidence is problematic. Right, I've done 2 days, 2 minutes of work, and I already think this is a no-brainer buy. Well, this is virtually impossible to get there based on that level of due diligence. But also the perpetual fence sitting is a problem too. So good analysts marry skepticism with the courage to see opportunity where opportunity exists. So just a few red flags, a few kind of important ethical potholes to avoid. And I won't go through all of this, but generally, sharing research outside of the firm or really kind of any emails outside of the firm can be compliance issues. Stock trading is an issue we get questions about a lot. I think generally there's a balance here that having an account, having a PA is good. It demonstrates passion and curiosity for markets. But the paradox is trading it actively during the summer is probably not so good. You probably don't want to be around the office talking about your longs and shorts. And most funds will either have you go through a compliance process for trading or pin you down on ETFs. So I'd say generally the advice we'd have is lay it down for the summer, put it into ETFs. Obviously, understand social compliance, understand compliance considerations for any exposure to material non-public information, and just avoid the ethical potholes. Many firms will have compliance training, even for interns, but these are a few things to keep in mind. Generally we talked about this in Philo, but think about your summer as really a 10-week sprint, right? 10 weeks to open doors to your future career and start developing critically your reputation as an analyst, right? Having been around for 17, 18 years now in this ecosystem. It is a 7 degrees of Kevin Bacon world. People know people move to other firms. You're very rarely, a decade or two down the road, one or two connections away from someone, and you start to develop a reputation as a hardworking, respectful, competent analyst, and you're developing that reputation now in your first 10 months. As junior analysts, right, without really the fully baked skill set, often the only answer to the performance challenge you are faced with is to deploy more hours, right? Which is kind of bad news, right? Sure, have fun. If my son was going to New York for 10 weeks, I'm sure he'd want to do all sorts of crazy things, go to Yankees games, and there's a lot of fun things to do, a lot of fun things to go do in the summer. Just understand this is a critical 10 weeks. You might want to think twice about excessive nights out or weekday happy hours unless it's firm sponsored, or weekends in the Hamptons. Firm cultures differ, but many firms, it's kind of not a great look if you as an intern are running into your, PM at Surf Lodge or senior analyst at Surf Lodge. And really kind of any vacations, with the possible exception of maybe 4th of July, which falls on a Friday this year when markets will be closed. So I did just kind of simple math of like two interns. One intern works 8 to 6, no weekends. It's 500 hours over 10 weeks. The second intern runs, hours closer to, I think Andrew and I ran in our first couple of years of, 7 to 11, shorter day on Saturday, afternoon on Sunday. And you really kind of see the total numbers add up over the summer that, intern two is working almost double the hours of an intern one. And so this isn't an opportunity for lifestyle hours. You can double your impact. There's a lot you can't control, but you really can control showing up for the summer, because the ROI on that hard work will really stick with you for the rest of your career. A little bit of an anatomy of the summer. I mean, 10 weeks is really not. Intern programs run 8, 10, 12 weeks, some longer, but you really have less time than you think. June will start with a big, flashy, exciting orientation and welcome, maybe welcome drinks, etc. PMs may attend or send you to attend conferences. Generally, you will have, certainly in healthcare, you have 2, 3, 4 healthcare conferences in June that are in New York. There was one in LA. So some of your team might be traveling to conferences. And I would encourage you to understand the earnings cycle for your sector, certainly for higher velocity firms. The vast majority, not the vast majority, I mean the majority of companies have a June 30 Q2 quarter end, which means that 2 to 6 weeks after quarter end is when most companies will be reporting earnings. So the end of June is usually the quiet period, or entering into the quiet period, where it's earnings prep time for firms that are really focused on earnings. And so trying to understand that, contextualize that, how you might be helpful in your ideas. If you're given an idea to look at, really understand, hey, if I get an idea June 1, if my PM gives me Netflix to look at for the summer, try to understand when in July that company is reporting earnings. Maybe there's something actionable to do ahead of that earnings period. Into July, I think first week, or I guess 4th of July is on a Friday this year. You have that pre-earnings period, and then really mid-July earnings kicks off. And so with the combination of potential continued tape bombs from tariffs and Trump and regulatory, with a kind of always busy mid-July and on in earnings, this is shaping up to be a potentially volatile, certainly news-filled summer. So prepare and understand for that, and understand that often if PMs get busy and aren't as kind of involved in your training in the summer, there's a triage element of focusing on P&L and performance that really kind of takes precedence over, in many sense, over intern processes. Then into August, earnings winds down. PMs will often use kind of the back half of August as one of the few quiet times in the market for the year. It's not always true, but often you'll find investment professionals at their relative preferred beach destinations. This is often when the potential presentation of your final project will happen. All right, so those are some of the basics. Uh, a little bit of process. Part of your job really going into the internship program is to have a playbook to answer this question. Take a look at the stock and let me know what you think, right? Back to the point that you're stepping into a busy summer process, right? You know, I've kind of never, and I'm sure Andrew's the same, like never just been sitting around on a Tuesday at 2 p.m. being like, hey, I'm kind of bored. There's not really anything I could work on. Right? There's always an incremental idea or situation that can be evaluated. That kind of is even truer in the summers often, that things actually don't slow down because often you're trying to overlay, kids at home. If you have a family, or camp, you're also trying to overlay some summer travel to keep the wife and kids happy. You're overlaying Q2 earnings season. And so summer isn't necessarily a slow time outside of the back half of August for the buy side. So you want to be prepared to really answer this question with minimal oversight and then view any oversight and support as a cherry on top, right? And so really would encourage you to think in preparation about developing your own institutional equity due diligence process, right? To understand what your from scratch due diligence process could look like, what a thesis development process looks like, how to go from an exhaustive initiation approach to key drivers and identifying differentiation on key drivers, and building out your toolbox of tailored analytics, different analytical technical processes to deploy in a purpose-driven way to the different situations that you may encounter. We're not here to pitch the Analyst Academy necessarily, so you can get a lot of this on just our open access Twitter. But my marketing team would be mad if I didn't note that we do have a May 12th Analyst Academy cohort starting, which we kind of did that intentionally to provide this kind of prep work for summer interns. So what do you need to be successful? You need the basic skills, the foundational skills of accounting, valuation, business analysis. If you're walking into a hedge fund internship without really a strong handle on the three statements and basic accounting principles, that's probably a problem. The buy side skills of communication and language and concepts that can really accelerate your summer. It's the expertise that matters. Depending on what you'll cover, you might cover an industry or two companies over the summer. Your job is to develop that exhaustive knowledge to answer any question posed. If you're in the position of pitching Netflix in the summer, at the end of summer, your job is to develop the deep understanding of the streaming industry and the CEO's background and how the dollar flows through the P&L, industry dynamics, et cetera. So develop that expertise in really a hyperspeed way to gather information, the baseline information about the company and the situation, the key information you've collected along the way, to ultimately develop the foundation of your thesis, which is an insider differential insight into what the market has wrong and what will resolve that misunderstanding, to really paint that together into a view as to why the opportunity is compelling. Your experience will differ a little bit based on, whether you're an undergrad, where it's more kind of come in, understand the job better, begin to developing skills to show promise. So I think this has advanced a little bit in recent years. Generally as an MBA graduate student, you'll have a higher bar and more direct experience. So a few ideas for preparation. One is just sharpen your technical skills. There's all sorts of resources out there, from Fundamental Edge or not. There's plenty of free resources, even a Wall Street prep, Training the Street, Financial Edge, modeling, accounting, due diligence, valuation processes. If you haven't done those, I would encourage you to do those. To the point that the team you're working on will be very busy, they will have time to answer the key questions, right? And they'll be responsive to the key questions. What you don't necessarily want to use your team's time to do is to answer basic accounting questions or basic valuation questions. So build that foundation on your own in an easily accessible way. If possible, try to get a head start on expertise development. This is what takes a decent amount of time, whether it's getting access to a primer library or if you're given tickers, to kind of read the transcript, filing reviews, experience with an AI supported up to speed process to really kind of develop a synthetic expertise in your space, in your companies. Start to understand the compliance procedures of what you can bring in. Some firms, if you want to build a model ahead of time, won't, for compliance reasons, won't allow you to bring that model with you. And many can't provide internal research until your start day. Try to understand day one what tools will be at your disposal. This might be a day one orientation question. What are the tools you'll need to be successful for the summer? Is it Bloomberg, Alt Data, Sell Side, Expert Networks, Visible Alpha? And try and connect with your sales contacts for logins, kind of your first day. And then I would encourage you to do a deep dive on a fund. I won't go through all of this. This was put together by Andrew to kind of learn where you're working, right? These are kind of basics. So just run a due diligence process on your firm. Compare the style characterizations, the 13F holdings. One kind of tip we always give people is to go look at the Form ADV Part 2 brochure, which is the firm stating their investment mandate and investment approach. Obviously, there are any podcasts or write-ups or anything on the firm really trying to go and understand that hedge fund analysts should be curious and resourceful. So apply that curiosity and resourcefulness to researching the fund that you're working at for the summer. Try to identify the tools you have for the summer, and in these yellow boxes over the few slides, it kind of put together a little bit of script of questions you may ask for your firm to kind of make this perhaps a little bit easier for you, and kind of simple things like, hey, what external tools should I be deploying for my research this summer? Do you want me using Bloomberg? Do you want me using expert networks? Do you want me using alt data? Or do you want me running just raw analysis based on publicly available information? So really trying to understand what the external tools you'll be deploying. The critical balance is speed versus accuracy. I would encourage you to really understand the idea velocity approach of your team, right? Are you working in a long only that has 2 new ideas per year, or a pod that has 2 new ideas per day, right? And so understand the idea of velocity, how your firm operates, and how you might be helpful in that process. Often firms will make this easy on you as interns, right? You're not expected to come in and be an idea generator necessarily. So often what I've done in the past and what many firms do is, hey, these are your 10 weeks, you're going to work on these 2 ideas, or you're going to work on an idea and then an industry thesis, right? And so firms will make it easy on you. Your job, however, is to make yourself useful, however you can, right? And so another script question I would encourage you to use is, hey, is there anything I could do to be helpful? Right? I'm working on my project. I'm working long hours, kind of making nice progress. Is there anything I can do to be helpful? Right? Sure, you could update the Netflix model and take a first cut on the earnings preview. Okay, great. Okay, great. Right? This may be out of scope of your project, but it gives you opportunity to see more of the workflow, make a positive impact, receive feedback, and show iterative learning. Right? A very common issue in an exercise like this is the senior analyst might, in his mind or her mind, be like, this should take 4 to 6 hours, right? This intern should do this in 4 to 6 hours. If you take 4 to 6 days to get it back to the senior analyst, that senior analyst will be like, what the hell is this intern doing? And so I would encourage you in this balance of speed versus accuracy to really ask the clarifying question of how much time would you spend on this, right? What is a reasonable amount of time for me to spend on this? All right. The senior analysts, if you ask them that, might say, okay, don't spend more than 6 hours on this. If you spend more than 6 hours, you're spinning your wheels. And so try and seek some guidance to help you with this critical balance of speed versus accuracy. I would also note that if a senior analyst says it's going to take you 4 hours, it'll probably take you 8 hours. So that's where the extra hours and the lack of lifestyle fits in. So you'll do a various, sorts of things in the summer. Again, often what will happen during the summer is you'll be sort of an idea processor, right? You're given two ideas. Hey, go look at Netflix and Uber over the summer, build a thesis, run the process, and let me know what you think. Pitch them as longs or shorts as the end of summer, almost as in an extended sort of case study. Well, your job is to do that and to do that with an A plus, but also, where possible, demonstrate your capabilities in the other dimensions of the analyst stack, right? To be an extra set of hands. Hey, I'm a low ego, helpful, hardworking person. If there's any other work that I could take off your plate this summer, please stack it on my shoulders. And I want to get more experience. I want to learn. Also, could you be an idea generator? A lot of idea generation at high performing teams happens in a cohesive kind of conversation approach, bringing fresh perspectives, create creativity. Hey, maybe you're working on a consumer team and you're starting to see inklings of the low end consumer cracking, right? Throwing out ideas, kind of throwing spaghetti against the wall and seeing what sticks and, kind of showing your opportunity to be a creative idea generator in a space. So you will perform a number of different tasks. You may go to a conference and meet management. You may listen to conference presentations for incremental insights on a stock your team covers. Very often you will encounter earnings season to some degree, either updating models or assessing the incremental impact to estimates on the names that you're covering. You definitely will be doing research. You'll be deep diving into fundamental drivers of the company, incessantly tracking those key drivers, conducting channel checks, validate assumptions in the model, and presenting some sort of presentation, condensing all your work into a forward-looking stock pitch format or industry thesis, and really trying to concisely distill your work into a digestible format. From a work quality perspective, one of the pieces of advice we like to give people is to pattern match the existing work quality. So consciously or subconsciously, your PMs are evaluating your ability to deliver work that meets the institutional bar for quality and rigor. In that sense, yes, even stupid things like formatting matter, right? If you deliver a model that's messy and I can't track where you put in estimates, I don't know what's an input versus a link, that can really be a problem. So what I would encourage you to do is not to be afraid to ask to see examples of existing high quality work, right? That could be complete models or thesis write-ups or earnings preview, right? What I would ask is, hey, might you have a couple samples of high quality work product that I could use as a guide to inform my work? And then painstakingly analyze those samples to ensure that your work looks, feels, and hits the rigor bar of that sort of work. Often you can get access to this in the drive. Some interns may or may not have access to the drive, but that's a treasure trove, right? The model drive at my first firm, when I could just go dig through all the models. I learned more about modeling late night, digging through a number of models, looking at all the bells and whistles and ways the team addressed different areas than I did in any sort of formal trading. And trying to understand, what does a sum page look like? What does a thesis work look like? Right? They're not really, we walk through an academy a number of different approaches, but each firm is going to have their own tear sheets, their own thesis write-up, their own models. And so try not to invent the wheel. Certainly don't reinvent the wheel as a summer intern. Your job is to even copy, high quality work down to the color palette, down to the formatting, down to the structure and nature, so that when your PM sees your work at the end of the summer, subconsciously can say, hey, this intern could deliver work at the caliber that my team does. That really smooths the opportunity for full-time hire. Communication is key. Communication is key on the buy side. Give you a few tips on that. Try to communicate in the fund's language. Do they communicate over IB, bullets, or essays, PowerPoints, or word write-ups? Generally, you'll see direct, efficient communication is really the language of Wall Street. Certainly, the language of the buy side. There's kind of a general general. I should start doing the stopwatch, but I do this when I talk to PMs now. I was like, you got 30 seconds of small talk. You got start the watch. You got 30 seconds to ask how the family is, how the weekend is, how the kids are, make a comment on the sports team, and then you get right into it. This is not really a career where you have excess time. We don't usually have 15 minutes to go on some long soliloquy about the all-inclusive resort you stayed at in Cabo. 30 seconds and get me right into it. Generally, I've always, kind of been annoyed at slow talkers or ramblers or the ums or like masters. Again, if you're saying like every third word, which is a scourge of younger generations, work to fix that. And I tell the story sometimes of watching a new trader join one of my firms where day one, he was a slow talker, a rambler, a like master, and then ultimately 9 months down the road, he just looked, felt, walked, and talked like a trader. And so there is some degree of communication training matters. And so fit in with the communication structure and nature of your team. Just be aware, study how the conversation and communication happens. Approach the bluff, the bottom line up front, or also like the pyramid approach, certainly in the emails. You don't want to make, if you're conveying information, analysts and PMs are dealing with such an influx of information. And so you always want to make clear what the conclusion is up front or what the bottom line is up front. So start with the conclusion at the top in an email, then more detail, then more detail. So I can dig deeper for the more rigorous underpinning knowledge if possible, but I can see your conclusion. I don't have to read 6 paragraphs to see what you think about this, new transaction or this new 8K that is out. Clarification is your responsibility. I used to do this all the time. I would get, as a junior analyst, I would get a task from my analyst, and I think I thought I knew what he wanted, and I would go away and run and do it, and then I had no idea. I missed the mark on what he actually wanted. And so it's your responsibility to say, hey, let me quickly clarify, repeat the task back to them. You want a model, you want a thesis, you want it by Friday. Anything else I'm missing? No. Okay, perfect. Clarify what is expected, repeat it back to them, ask for confirmation to ensure you're not spinning your wheels. Responsiveness is critical. This is a 24/7 job, maybe not a 24/7 job. I don't necessarily expect interns to have their emails, checking their emails at 3 a.m. But if you're going to bed at midnight and you still haven't responded to outstanding emails, that's probably a problem. And so there is some expectation of almost round the clock responsiveness, even if that's a just confirming receipt. If it's a PM question on a write up you did, hey, received, I'll dig into this in the morning and conduct some research and get back to you. So try to be responsive. Try not to leave your PM or analysts emails hanging for longer than an hour or two. And certainly if it's an IB or during the day, being as responsive as possible. I think the
Yeah.
last point,
Well,
yeah, Andrew.
Uh, yeah, if you're thinking about how to structure your communication during the summer, whether it's written or verbal, or even for things like small talk, just think air traffic control, high signal to noise, just brief, straight to the point, say what you're going to do or acknowledge receipt. That's it, and then move on. That can only do you a lot of good.
Love it. And then calibrating conviction, right? Working on, framing things probabilistically, delineating what you know versus what you believe, what sort of data informs my statements. Making wild, unsubstantiated claims is often something that junior analysts will do these days, or junior undergrads will do. Having taught them at ASU for a few years, I see that quite often. Palantir is the best business in the world. Well, why is that? What do they do? Walk me through how a dollar goes for the P&L. And so before you make a definitive statement, understand that that should be backed up with data analysis and kind of a deeper bottom part of the pyramid. So both the eternally convicted analyst and the internal fence sitter are problematic. Finding that balance between courage and skepticism matters. Keeping the PM in the loop is a challenge. At higher velocity funds, they'll do this over email or IB, kind of communicating constantly through the day. For an interns, generally at a minimum, having some sort of weekly update where it's a weekly catch up with your supervising analyst and PM. I always like the structure of the weekly email, and you kind of encourage you and your teams to think about this as the North Star of, hey, what I worked on this week, what's my plan for next week, what are the outstanding things, what are the things I need from you. Most often these are put together on a Sunday afternoon as kind of your weekly check-in via email. Your PMs are going to have this game of never-ending triage, right? This is kind of my schedule, kind of half humorous as a PM. Really, if you read the fine print, it's kind of, you have surprisingly minimal free time as a portfolio manager. The best case is you get 5 to 7 hours a day of real kind of due diligence research time, but really you get maybe 1 to 3 hours. So it's difficult in the context of a rigorous thesis requiring 40 to 60 hours of focused work, which is why these teams and analysts are so important. The reality as an intern is that at any given time, your PM is going to be busy, right? Your PM's never going to be sitting twiddling his or her thumbs. And so when you walk into his or her office, you're almost always going to be disrupting something. The question is how disruptive that will be. And so part of the challenge of eliciting feedback and building relationships without being annoying is that most PMs are bad at giving feedback because there's an intense triage-based focus on P&L generation and the triage of daily issues. There's almost always something to figure out or something going wrong in a portfolio in a sector in a given day. And so really trying to work to elicit feedback within the context of that is a little bit of a trick. That's where weekly check-ins can be helpful, a midsummer performance review, where you can, ensure the demonstration of tangible improvement. Coffees and lunches and intern events are kind of common areas where you can elicit the feedback. So I would encourage you to, be strategic about timing. Try to find when your PMs are less busy. It's generally not in the pre-open, around the open, or near the close. Your lunchtime on Fridays, after the close on Thursday, different times when things tend to be a little bit quieter. Certainly understand the earnings cadence. You don't want to walk into your PM's office right before Netflix prints if Netflix is your largest long. Try to leverage your natural opportunities to elicit some of these questions, whether those are intern events or group lunches or just a lunchroom serendipity, right? In one sense, I could go, if I'm working in a 20-person investment firm, I could go email all 20 people to be like, hey, can we go set up coffee at some point this summer? Some might be all right with that. Some might be like, yeah, I don't know. I'm kind of busy. I have a lot going on. But you could touch base with all 20 in the lunchroom or at a group lunch or at intern events and handle it in a little bit more of a natural, free flowing way. One of the things that's challenging as a PM, having an intern is really the hunger for feedback, right? I've had this sometimes where I've had an intern for 2 weeks and they ask for feedback. It's like, I haven't seen any real work product yet. I don't have anything to really give you feedback on. And so I would encourage you to create value before asking for feedback, to demonstrate usefulness first and then ask for guidance on how to be even more helpful. Is there anything else I could have done better on the Netflix model? Pay attention to subtle clues. Pay attention to nonverbal feedback, reassignments. If you were taken off a project or how your work is being used. That's where having a junior analyst on the team, a full-time analyst to kind of be your Sherpa and run past is like, hey, the PM did this. Does that mean I'm in trouble? Does that mean I did something wrong? Can I get that back on track? Understand those subtle clues. And then where you can try to batch your questions. So save several small questions for a single interaction in your weekly checkup. Generally good hygiene would be to have, as kind of analyst and supervising PM is to have this kind of weekly check-in where you can have your big batch of questions. I put together a list of kind of 5 questions here. I won't read those, but we'll send the deck out after of, ways to kind of elicit feedback. What's one specific skill you think would make me more valuable to the team if I developed it further? From your perspective, what separates the most valuable junior team members from the rest? And I see a question in the chat, so I'll use this question to answer it right here. But if I have, the question is, what do you do if you're not really getting meaningful work and feel like the team isn't valuing you? A key question you could ask is, based on my work so far, what type of projects do you think I should seek more exposure to? Or what is one specific skill that would make me more valuable to the team if I develop further, right? Kind of a soft way to nudge the team of like, hey, is there anything else higher value that I could be doing that would be more valuable for you? So that's
Yeah,
what I would say to that,
it's
Glenn.
it's earned from the team. You need to demonstrate, mastery, dominance of the simpler tasks that they're giving you so that they will feel comfortable giving you a little bit more responsibility with higher level tasks. But if you're already doing that, then that's when you can start asking these questions.
I think there's also an opportunity too where if that's happening, you can go to full-time analysts, right, during earnings or something, just say, hey, is there any way I can be helpful? Right? The PM won't necessarily have full insight into all of your processes during the summer, but at the end of summer, the other three analysts on the team were like, yeah, Joe was great. He did great work when I, was there at 8:30 p.m. on after an earnings print and he helped me, summarize the call and update the model. And so really being not necessarily, just sitting back and playing the victim, but really being a little bit, respectfully putting yourself out there to say, hey, I have capacity. Is there anything else I could do to be helpful? Whoever said there are no dumb questions never worked at a hedge fund. There definitely are dumb questions at a hedge fund. I've asked a lot of them, including where do I find the Q4, 10Q, and there are also dumb times to ask questions. So curiosity and a well-crafted question is a sign of a intellectually talented analyst. So you can't ask too many questions, but I think most analysts probably don't ask enough. And so have the courage to speak up, ask questions, and share your thoughts. And really, a few things on the art of asking questions in your summers. Do your homework first. You don't want to ask questions that you could really figure out on your own. You want to save those questions for, hey, analyst PM, what is your unique approach process, right? Trying to elicit what you can't figure out on your own. You don't want to ask, how do I model this DNA or amortization for Netflix? Try to batch the questions, but be prepared to ask them in natural context, being specific and concise, and time your questions appropriately. Again, you don't want to ask them right before an earnings print. And you want to focus on learning, not impressing. That's a little bit swarmy, to try and ask a question where there's clearly, an ulterior motive to try and impress or show how intellectually intelligent I am. So ask genuine questions focused on learning and listen actively, following up thoughtfully. Try to find your Sherpa for the summer. Again, putting out a few times, PMs can be busy, right? This is what's very often can happen is the neglected analyst issue where you join in June, you know, to a great, exciting orientation, welcome drinks, welcome dinner, night out on the town, big hopes and expectations. You're given a project, and then it just kind of goes into a black hole. And 6 weeks later, you haven't really engaged much with, senior members of your team. They got busy trading the tape, et cetera. And so this happens. It certainly happens in this industry. And your best asset in that context might be a junior analyst who's 1 to 2 years ahead of you. It certainly was for me when I joined the business. They generally have more open time. At 9 p.m. at night, you're not going to see most PMs there. Certainly PMs that have a family. Um, but I was able to 9 p.m. at night ask the endless stupid questions to the guy 1 year, 2 years ahead of me, who really became more my practical mentors. They're closer to your stage, and they remember what you don't know. Where the PMs kind of forget that, hey, oh, this person doesn't know all of these processes. They can be under their own stress and pressure and have it, and they have incentive to help you, certainly in positive cultures, but not direct incentive. And so fostering these relationships can be really important. And if PMs are consumed with the tape on, say, something like tariffs, this junior analyst can be more of your direct mentor. And so scripts like, hey, would you be open to taking a quick look at this thesis before I send it up to the senior analyst PM would be very appreciative. That first look analysis by sending your big thesis up to an analyst first for feedback can be the difference between great feedback on the final or not so good feedback. Am I on the right track, or what would you change? So find that Sherpa at your firm to guide you up the mountain. If there isn't that person in your firm, if it's a small firm, you're only other intern, try and find a Sherpa at another firm. Be careful with sharing information. Get approval to do that first. approval to do that first. But that can be kind of a make or break dynamic um, in the summer. We're speaking mostly to interns here, but I wanted to give just a few things, a framework for managing an intern, and a few kind of buckets that I've tried to do in the past. Is some sort of like pre-arrival roadmap, setting out explicit expectations, the tools and resources, a little bit of pre-work. Hey, here's some primers. Go do this Wall Street Prep modeling course, go to the Fundamental Edge Analyst Academy, kind of prepare for the summer, first day orientation, which is always kind of a fun, welcome event, and really try to focus on defining success criteria. What are the deliverables we're going to ask? How are we going to evaluate that? What does good look like? This seems like basic things, and in most Fortune 500 firms, this would be like, yeah, duh. Um, you'd be surprised how often this doesn't happen in the Andrew's laughing in the hedge fund context. I would try to time box the milestones as well too. And so just sit and let's break the 10 weeks into 2 week sprints with deliverables. All right. You're going to cover Netflix. For the first 2 weeks, you're going to develop a model and a 15-page write-up on what the business does, how they make money. Right. The next 2 weeks, you're going to develop that into a thesis, identify the key drivers, and conduct proprietary research. The last week, you're going to put that thesis together and pitch it to the firm, right? So try and help your analyst intern who doesn't really know what to do, give them some structure to somewhere in those 2 week sprints. I liked to assign a shadow task, something that is a recurring job and normally handle, usually like a weekly screener or model updates, things that can take some responsibility off of my plate for the summer and give the intern something beyond those two projects to really feel like they're part of the team. And then creating structured touch points. These don't have to be long. These can be 15-minute huddles and maybe a longer huddle on a Friday. Try to create a live feedback loop, a nudge to give feedback on submitted work within 48 hours. Um, and putting in some sort of skill clinics, right? And so early in the summer, try to identify the skill gaps you spot. And these can be even 30 minutes. All right, let's do a 30-minute teach-in on earnings previews. All right, let's do a 30-minute teach-in on short selling. All right, we're going to do this Thursday after the close. Come into my office. We're going to walk through a few things on short selling. So try and institute a little of this as the person managing the intern to bring that person along. And then end of internship, a scorecard feedback. I went through a few um, highly expensive hedge fund PM managing, how to manage intern programs at the various firms I worked at. One of the big things I took away is the feedback sandwich. And so if you're giving feedback, start with a positive element, you know, don't be afraid, bring the meat of what needs to improve, and then end with more positive feedback. So there you go. I just saved you $20,000 in management training with the feedback sandwich. At the end of the summer as an intern, try to genuinely reflect on whether this is the right career path for you. Did you enjoy what you did this summer? Work to gather references in a soft way. This is where kind of having the end in mind is helpful. If I have exposure to a number of other analysts on the team, if I help them with earnings previews and model updates and really spent that time building relationships, this can be particularly helpful if you didn't receive the offer, if you were close, but maybe there was 8 interns, 2 offers, and you were kind of just missed the cut. It's going to be really important to have references that can speak to your skill set. And Wall Street is a small world. Using this 10-week period to develop relationships, these people will come back and you'll see them in your careers, whether you like it or not, for decades to come. Don't be afraid to express interest in a full-time offer. Hey, I really enjoyed the summer. I like this work. I can see myself doing this full time. If I were so lucky, I would really be excited to come back full time. Don't be afraid to ask for what you want. Closed mouths don't get fed. And then if you do receive the offer, understand opportunities for off-cycle internships or extensions that can be really helpful. In-semester internships can really be a great opportunity virtually to extend some of the learning that you had over 10 weeks. So all of the work is cumulative towards landing that full-time buy-side offer. With that, we will now enter Q&A. First, I will turn it over to Andrew to see what I missed, what he would add, revise, or change.
I would emphasize the point about studying the format of work products of the team. We talked a lot about putting in some time on the weekends. What are the kinds of things you can do? You can go into the office, look at the format of things, models. Now be very careful. Don't go around, mucking up somebody's model. Save a copy to your desktop so you can look at it and then, shine a flashlight around the financials in the model. But start to get a sense of, oh, does the team model things on incremental margin? Is this company modeled on a year over year or quarter over quarter basis? Just you can start to see these things, and it's through this exposure that you can really learn a lot. And then, leaning on a little bit more of a senior analyst to ask, what are some pitches that really worked? What I might also add, he's not on this webinar, but another one of our instructors at Fundamental Edge, Paul Johnson, co-authored a book called Pitch the Perfect Investment, which offers, in my view, a second to none characterization of the analyst PM relationship. Although you're an intern now, it's never too early to start anticipating what it could look like to be an analyst with a PM. And so I might add that to the summer reading list.
Yeah, great piece. Um, Now we'll take Q&A. So any questions you have, feel free to just drop them in the chat, or if any brave souls want to raise your hand, happy to turn the mic on for you to ask those live. Um, and we're here to kind of answer any questions you may have about what we just laid out for you, or any questions you're wrangling with as you head into summer. Or for any more senior investors on the team, happy to hear what you would add to that recipe for a successful summer. And are there any kind of FAQs in this dimension that come up commonly for interns joining for a summer?
I think one of the things that comes up is uh, understanding how to prioritize time. So we mentioned it in kind of organizing your week, but when you do your weekly, that really is your North Star, because your PM basically becomes a ghost during earnings season, and they may not reply to emails, they may not reply to things on Bloomberg chat. So you have to be a little bit self-contained and just keep advancing the things that you know you need to do. So that's one of the things. Another thing that I would mention is from time to time, there may be opportunities to go to, a lot of events in New York that might be sponsored by a broker. So it looks like it's a work activity. My word of caution would be just be exceedingly selective on which of these you go to, and don't make it a recurring habit, because you only get the invitation for the events because you are in the job. But if going to the events costs your performance at the job, that's not advisable, particularly if you're trying to make a strong, powerful first impression.
Yeah, yeah. For sure. How will the slide deck presented today be shared with attendees? Probably email it out to everyone over Zoom, I would guess. Or we may put it on a landing page. I need to ask Jess what's the right way to do that, but we'll get it to you. If not, yeah, we'll get it to you. If you don't receive it, email Brett or info or Andrew at fundamentedge.com, and happy to share that. We have one in the webinar chat. What are the common pitfalls in thesis generation you think would be good to mention, from time efficiency to thought processes that aren't as differentiated as thought? Yeah, I think one of the tricks of the common intern project is the attractiveness of an idea, right? I'm not close on Netflix, so I'll use Netflix as an example. Say you're given Netflix this summer, to look at, and Netflix is, $1,100 stock right now. It's been an absolute kind of monster over last year, doubled effectively over last year. And you're asked to generate either a long or a short on Netflix. Well, I can go do my research and I could understand, hey, they're going to beat earnings, the business is performing really well. I can't really find any fundamental weakness with the business. Yeah, it seems kind of expensive, maybe a little bit extended, but that isn't really fodder for a short. All else equal, it's not really an attractive long or short. Say, I'm just kind of making this up, saying this might be your conclusion. How do you pitch that, right? And so in the normal course of business, that's just in the too hard pile, or that's in the hey, not interesting pile, and I go look for other ideas that are more compelling. The challenge for the intern is if you're given that company for 5 weeks to learn to look at, um, you know, if I pick a stock from random stock, I mean, there's not a hugely high chance that it is an interesting long or short. And so you're leaning to some degree on the team's ability to recognize that the name they give you is potentially interesting. But if they're just giving you a random idea to demonstrate your ability to do research, that's a little bit harder. And so you could be spinning your wheels, not necessarily working on something that's going to be included in the portfolio. What would you add to that, Andrew?
I'd probably say in terms of communication, and it's ultimately the output of thesis generation, but as you're thinking about articulating your thesis, always be mindful of what the market is missing, why this opportunity exists, and how the misunderstanding gets resolved. Kind of always asking yourself what, why, how can help clean up a lot of your thinking and help you prioritize certain elements of your research versus others. Because ultimately, what this rolls up into when you're communicating your thesis to whether it's a senior analyst or the PM is not a display of all the work that you have put into understanding the stock, but rather saying from here on out, it looks like this stock is a long, or from here on out, it looks like this stock is a short. And there will be time for members of the investment team to dig into the work that you did to substantiate the claims that you're making. But remember that you're not doing a book report. You're not giving a history lesson. You're making a forward-looking statement about where the stock can go from here. So that's certainly a hard thing to integrate at the beginning of an internship, but always remember that people are interested in what the stock is doing next.
Yep. Yep. All right. Do you have any other questions? I think did Meta report today? Maybe this wasn't the perfect timing for, although for students might not be as engaged in that.
Also, Microsoft.
Yeah, busy earnings day today. Um, Keep it open for another little bit if there are any last questions. If not, um, you can email us, Brett at Fundament Edge or Andrew at Fundament Edge. Um, Thanks, Fletcher. Appreciate the participation, and we'll send a recording out. This is recorded, and we'll go out to everyone who is registered for the Zoom. We'll probably drop it on Twitter as well too, or maybe out to our broad email list. And you talk to Jess about that. Other than that, thanks for your time. Thanks for listening. Best of luck for your summer. Please reach out to us if we can be helpful. See you, Andrew.